The headline index has shown a deterioration in business conditions for 4 consecutive months. The expected business conditions index dropped to its weakest level since April 2020. Analysts say that this is the most pessimistic respondent since the COVID-19 lockdown, and the possible higher stages of load shedding during winter is likely to contribute to the soaring in sentiment.
We're thinking that a big part of this weakness that we're seeing reflects this ongoing challenge that we still have with electricity supply. I think when you look at May and April specifically, we did see more intensified bouts of load shedding when you compare with a little bit earlier in the year. And I think that really, it really does come through in the underlying data as well. And I think that's really the big challenge for the sector right now in terms of their operations.
Maluleke says that the strength that was seen in the manufacturing sector in the first quarter of this year is not likely to be sustained, and that the decline in manufacturing is also believed to be associated with the sector's concerns about how South Africa is handling the Russian visit issue.
Perhaps there's also some concern about some of these geopolitical, I think, headlines that we've seen in recent weeks, and perhaps that particular index expresses some concern about the uncertainty about what that may mean for South Africa down the line.
Maluleke says the weaker rand is adding cost of imported inputs and not doing much to provide support to exports. But he is optimistic that the manufacturing sector is likely to contribute positively to the growth of the gross domestic product data to be released next week. Naledi Matlapeng, SABC News, Johannesburg.